Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is John Feneck. He is the consultant and portfolio manager of Feneck Consulting. Welcome back, John.
Hey, thanks, Ivan. Thanks, Jim. Appreciate it.
So, John, you're a money manager. You're watching all these things on behalf of your clients. That's why we like to have you on. And what everyone's watching right now is the upcoming data, that the government releases in terms of non-farm payrolls, GDP numbers, just everything that goes into what the Fed analyzes on whether or not they're going to raise rates, how much, pause, pivot, whatever people want to call it. So what are you watching right now? Is it already baked in what the Fed's going to do at the next meeting in November?
Yeah, I think November 2nd is baked in. The Fed Watch tool, which is produced by CME. If you Google search that, it's a very helpful tool for investors to use. It is showing a 75 basis point hike November 2nd right now. I don't think anything is going to change that at this point unless we have, an outside event, of course. And then if you look at the Fed Watch tool as of close yesterday, it was showing like a 49% probability between 50 or 75, even in December's meeting. The average person is not really aware that you're looking at another 125 to 150 basis points here by year end, which, we've said on your show when I was on with Ivan, and I've said all year, I really think that December to April is still my time frame for a potential flip-flop, or we could see the Fed just back off a little bit, right? We could see them in January just say, okay, instead of 75 or 50, we're going a quarter. The market would love that, right? I mean, any respite from rate hikes would be a good thing.
So with the Fed funds rate at currently 3% or in the low 3% area, we've got most of the yield curve for 10 years to 2 years and even the shorter terms, right, just above 4%, right? 4.1, 4.2% is where most of the yield curve is right now. So if the Fed raises another, 1.25, 1.5% in the next two meetings, we're probably going to see most of the yield curve get up into the high 4, low 5 area. Is that how it works?
Yeah, I mean, it's hard to say really like what you're going to see because if you look at the TLT, which is what I track, in ETF land, that has just been a downward spiral all year. So, I mean, bonds have been a terrible place to put money this year where, you look at the last 40 plus years, that's the exact opposite. So this is what makes this market so challenging. It's like bonds used to be your friend, used to be a safe haven. You can't count on that anymore. The only things you could have counted on in a rearview mirror this year is that our currency was the strongest of all currencies, and cash is cash, right? And cash is yielding more now, so that's more attractive to clients. I still think that the broad market is in a major downturn here, and that will accelerate into Q1.
If it's already this bad, and there's two more rate hikes coming. I mean, the construction market, the housing market, the mortgage refinance market, they're going to be in a coma come December. I mean, I don't know. I'm just sort of, I'm just a dumb guy on YouTube who's amateur, just talking, making stuff up as I go. But it just seems to me like we're headed for something really bad here.
Yeah, I mean, but look how good it's been, right? I mean, I keep saying this, like you got to look at the last 13 plus years in the equity market as being fantastic. Got to look at the real estate move in just about any market in the U.S., just speaking as a U.S. citizen, as just amazing over the last 5 years or so. So, are like 40%, annual increases in house prices normal? No, it's kind of cool.
Yeah, why not? Why not? My house has doubled since 2019. Why can't we just keep doing that?
That's just, I mean, I would love that, Jim, believe me. But I'm trying to be pragmatic for all clients here and just say, look, things have gotten so good and we're flipping that narrative to now. Like, I think you look at Microsoft's numbers today, you look at Google's numbers today. These are not small companies. They were down huge, both of them. I mean, this is major stuff. Apple's coming later this week. I mean, tech has been leading this rally for a decade plus, right? So if tech falters, you're going to have some serious selling going into Q4 and Q1.
Yeah, if you look at all those big, huge market cap ones, it's like all the rest of the Russell was like way down. But the index numbers, the big numbers, the NASDAQ, the S&P 500, the Dow, those were held up by just a couple of names really that were
Mm-hmm.
dominating percentage-wise the big index. Now, Apple, Microsoft, Google specifically, just make up such
Right.
an outsized proportion of the indexes.
Yeah, and that thin leadership is what we also have been talking about for, since last November, is like that's really dangerous. So, when you're in these glide path models that these financial advisors that I've worked with for years put a lot of clients in, you get a piece of the NASDAQ, you get a piece of the Russell 2000. You got to look under the hood and say, okay, the Russell 2000 is 2,000 stocks. How do these stocks trade? Well, they're super small, by market cap. There's 1,100 of the 2,000 roughly that only
Mhm.
trade $5 to $7 million a day US. So in a real sell-off, the IWM, which is the Russell ETF, is extremely vulnerable in my opinion. And that's our favorite short in the US right now.
So this leads into, obviously we care about gold and silver and the mining stocks and those types of commodity plays. But primarily gold and silver and gold. See, I gotta say silver and gold are what we care about most.
Right.
And so everyone's waiting for, all right, Fed pivot. I don't think we necessarily need a Fed pivot to lower rates. I think gold and silver are going to take off if they just announce a pause or any sort of slowing down. People are so primed to make, because we've seen it a few days where some Fed governor, goes and speaks at some, presentation somewhere, and he hints, if one of them even hints that maybe we're raising a little too fast, right? Just one of them even talks like that. You see gold take off by $20 until another one says something else that's more, hawkish, and then it all goes away the next day. But you could see it if the Fed, after they raise, let's say hypothetically, I want to just throw out a hypothetical situation, and then you can tell me whether you think this is plausible or not, because you're the pro and I'm the amateur.
Not at all.
Let's say the Fed raises 50 basis points in December, 2 meetings from now, and then they announce, we're going to pause and sort of digest this and just see what, we've raised enough. The market's showing, the economy's showing signs of weakness, unemployment's ticking up. We don't want to overdo our increases, so we're going to just sort of pause and evaluate and watch, and just be data driven, data dependent, and just evaluate. If we saw that sort of pause language coming out of the Fed, what do you think gold or silver is going to do at that point?
Oh, I mean, it would be reminiscent of December 2015 when that was, kind of a bell ring for gold bottoming right there. And the miners really took off in January of 16. But I think it's, you're setting up for what we call a slingshot kind of move here, in my opinion. I mean, you're seeing that action today. And the big caps almost always lead. Look at AEM today, over 4%. NEM was up at 3 to 4% at one point. PAAS on the silver side, we just bought some of that between 16 and 16.13 yesterday. That's one of Rick Rule's favorites, so it's like, I'm going to use this opportunity as an investor to upgrade quality in my portfolio, right? I want to lean towards producers because these producers typically aren't hedging production, right? So like, if you're fully exposed on the way down, as we have been for the last 26 months since August 2020 highs, you're going to get it on the chin, but then you're also going to make so much money on the way up. So you need to identify, are these companies, hedging production right now, yes or no? And if it's no, they're fully exposed to the price of gold or silver going up. That's a positive thing.
So John, you've said that you really like the junior producers, the smaller ones that have the upside. They have the resources they're producing now, and they have the exploration upside to massively grow going forward. What are the junior producer names that you like right now?
Yeah, let's start with probably the smallest. That we're just starting to get interested in here in SilverX, which is a Peruvian silver company. There you go. So if you look at their news on September 6th, they announced basically that they increased their silver production pretty substantially from just 2 months earlier in July. So, you look to see companies that are growing production and have a reasonable cost structure. So, SilverX fits the bill for that. on the back of this news, they started, if we go back, just a page, Jim, to the news page there, you can see, yes, if you just scan up, you'll see that they started to do what we call a private placement October 14th. That was a $2 million option, offering that they now have upsized to a total of $3 million. So doing this at a pretty good time, because if you remember, October 3rd, silver was up 9%.
Yeah.
So there was definite interest, more interest in doing something like this. They upsized as a result of more interest in the market, which is fantastic. And they're cashing up at a great time, before this.
A lot of people who I've talked to are really into the SilverX story. Lawrence Lepard, a number of big names, Gold Ventures have been buying SilverX. Because this company has like 200 million ounces in reserves. They're only producing right now 2.5 million ounces. So literally at that production rate, they got 100 years of mine life. I mean, it's ridiculous. And so this is one of those companies that has huge upside potential, well beyond the 2 million ounces a year that they're producing right now. And it's ridiculously cheap. People do not recognize how undervalued these companies. I mean, there are exploration companies with no production that have higher market caps than some of these.
Oh, wow.
Right? I mean, I'd much rather have a company that's producing, is mildly profitable with huge upside profit potential, rather than an exploration company that has no revenue and just maybe in the future. This company has mills. They have the infrastructure already in place and they're producing, right?
Right. And having all that set up in this environment is key, right? Because you're not overpaying to build a mill. You already have that infrastructure in place. Just another thing to mention, Jim, a couple things. First, one of the screens we look for is management. I like Jose as CEO, but I also like that Paul Matizik is, their lead advisor, obviously a mining, superstar. And if you look at their fully diluted share count before the offering that we just talked about, it's only 154 million shares. So that sounds like a lot to some people, but it's really not. It's a very manageable number. And they're coming out with their PEA here in the next 8 weeks. So it's like there's another catalyst, right? If you look at the chart, it's a beautiful looking chart for a small silver producer. It looks like it's about to break out.
Yeah. So another name that you like is Silvercorp Metals, and I like this one too. These guys, this one's crazy to me. They've got a market cap of $480 million right now.
Right.
This is a producer in China that's producing 6 or 7 million ounces. And they've got 216 million in cash. They own a huge stake in New Pacific worth another 90 million. So there's 300 million right there. And the total company has a market cap of $480 million. It's like you're getting all of their mining production, 6 or 7 million ounces a year, and over 100 million in reserves, ounces of reserves for $180 million. That's ridiculously cheap.
Yes. It's our third largest silver position right now. We've been consistently growing it from $2.37 up here to the 250s. But again, one of our strategies, Jim, which makes us different than a lot of competitors, is we're going to continue to buy stuff in small increments on the way up until we get that conviction time, right? Like you had just talked about 25 silver. That would be a conviction moment, right? When we break that with some authority, then we go much heavier in. But right now, we're continuing to add to our position that we've had, by the way, since 2016 in this stock. So I know this stock better than most. The knock on it has been China, right? Like, who cares? Look at what they're doing in China. Look at how many disruptions they've had in China since the obvious in COVID. None. So these guys have done a great job of mining.
Look at
this. Guess how many rigs these guys have going right now?
Like 70 something rigs or something.
Yeah, it's like 80 rigs. 80.
80 drill rigs.
So when you look at New Pacific, zero debt, which is awesome, right? Because
they do
debt has been the killer of many companies over the last 10 years, and this has zero. I don't see them taking on debt and doing something silly because management's really responsible, in my opinion. You look at the value of NEWP, New Pacific there, that stock's gone from $2.03 7 sessions ago to close at over 230 today. So that thing's up, a considerable amount. They get no credit for that whatsoever, but that is diversifying the company, right? Because New Pacific is in Bolivia. So they're not in China. I see the company in 2023 making some type of acquisition with that big number you pointed out there. I mean, they want to buy something, but they're not going to just buy anything.
Yeah, they're not going to overpay because they had this deal for Guyana Goldfields where they had an option on it, and then they got outbid by someone else, but they got paid to what they made a ton of money from the breakup fee of their deal they had on that, or I forget all the details, but they tried to acquire something, someone else took it from them, and they just walked off with a big old check because they weren't going to overpay and chase it. So
Zijin Mining was the acquirer there, and they just didn't want to get into a huge bidding war. Let me throw a couple stats at you because I'm just going to read this. Usually I just go from memory, but this is something I want to get correctly because there was a news announcement here August 29th that they announced a normal course issuer bid. For people that don't know what that means, it means the company can acquire up to X amount more shares, so they can try to extinguish that those number of shares over time, which is about 4% of the float. So if they do follow through on this, which in talking to the company, they want to be buying more of their shares,
they're
taking them out of the market. It's a positive thing, right? It's not a negative thing. And so when you look at future key free cash flow in this company, it's amazing. You look at their profitability, it's amazing relative to other mid-tier silver companies.
Good point. And so the other third name that you told me you like is Silvercrest Metals. This is a company that's just now going into production in Mexico. What is it you like about Silvercrest?
Well, again, going back to the people aspect, you look at Eric and Chris as leaders of this company. They've set out to the public, hey, we're going to deliver this, project Las Chispas on time and on budget. And they did that. How many companies have done that over the last 2 years, like in the silver space? I don't really know too many at all. A lot of companies are making missteps. A lot of companies are well over budget because of rising commodity costs, right? But they got it done. And so now you're transitioning into the producer, kind of role. There's a little bit of friction there, of course, anytime that you do that, but that's the opportunity, is to buy something with, a low AISC. We just talked about Silvercorp. That's about $9.25 an ounce. Silvercrest is slightly higher than that, but not much. So with silver, closing in on, 20 to 22 range, both those companies in the mid-tier space are going to make a lot of money for shareholders over time.
Just for full disclosure, I'm an investor in Silvercrest also. So this is a company that their cost of production is so ridiculously low, I think close to $10 an ounce, that they've got the leverage to be profitable in any market, right? They're profitable in the current market at $18 or $19 an ounce, or they will be. They're scaling up and dialing in their production right now, and getting everything running optimally. But this is the type of company where you can own this in a good market or a bad market. It's still going to be profitable. And if silver, as we think is going to happen, eventually takes off to $25, $30 an ounce, these companies are just raking in cash flow at that point.
Yeah, absolutely. Yeah, I mean, they're boring stories right now, which is why you buy them as a value manager, because the market is still hanging on to hope, right? Like as Don Durrett says, hopium, which I think is a hilarious way to put it. But October 3 and 4 is hopium, right? You look at the UN writing a letter to central banks pleading with them to stop raising rates. Are you kidding me? Like, who cares? No one cares. But the broad market cared. Like the BlackRocks and Vanguards of the world bought that head fake, and they went into the market real heavy October 3 and 4, and then it faded October 5. And then you got slapped with non-farm payrolls October 7th, and we lost everything back to literally where we were at quarter end almost September 30. Notably, the S&P closed below a key level on September 30, which was the 3,600 level. And we were saying that if you get a quarterly close under 3,600, that's going to bring in some more selling into Q4. We haven't really seen that yet, but that close at 35.86, I think people will look back on and say, wow, that was kind of a foreshadowing of what was coming, that this market is unhealthy.
Mm-hmm.
Well, John, thank you very much for joining us. We appreciate it, and we'll talk to you again in the next 3 months or so.
Really appreciate it. Thanks, Ivan.
Take care, John.